In this video, we will speak about difference between AML and KYC. Do you know the difference between AML and KYC? You may have heard about AML and KYC, and I often observed AML and KYC being used interchangeably, whereas there is a clear difference between the two. AML is used in the context of overall framework that a regulated entity construct to meet its AML or CTF regulatory requirement, whereas KYC will be a process within AML or CTF program. A regulated entity will often talk of their AML and CFT obligations. On the other hand, vendors will frequently refer to KYC obligations, and perhaps this distinction is correct as vendor will often supply content, software, and services that support the KYC element of AML and CFT program. So let's get into more detail. Let's understand uh, difference in terms of definition and other attributes. So let's understand definition first. AML is a framework, processes, procedure built by regulated entities to meet regulatory requirement. AML is an umbrella term referring to the range of processes which firm must put in place to meet their regulatory obligations. In most jurisdictions, AML regulation require firm to develop and implement an AML program that is tailored to their own business need and is capable of managing the specific risk that the customer or sector present. And in case of KYC, like sometime referred to as customer due diligence or often called CDD, know your customer is a component part of the AML framework, and specifically the process of verifying customer identity. Now let's understand the scope of both the processes. In AML, it includes monitoring of transaction, payment screening, staff training, risk assessment, data protection, and regulatory reporting. However, in case of KYC, it could be limited to client risk assessment, screening, due diligence, and to some extent transaction surveillance. The KYC verification process would require a firm to establish basic information about their customer like name, address, birth date, etc. Obtain information about the nature of customer business in order to understand the business relationship into which they are entering. Establish the beneficial ownership of the company. And I've also spoken a lot about customer due diligence, the main element in and few other videos. Probably you can refer my videos, all right? And the last element I would like to talk about is purpose. The purpose of AML is to detect and avoid money laundering and terrorist financing. However, in case of KYC, the purpose is to identify your customer and making sure they are who they say they are. And it also, KYC is also being performed just to remove anonymity and also to gather information on customer to create a customer profile where this profile would be referred in all different departments wherever they need to perform any investigation or they need to understand the customer profile. So that's where So this is where KYC come in really handy. So that's all about AML, difference between AML and KYC. Thank you for your time today. You all have a very nice day. Bye.